and the president at BT Block. David, you look at stocks, you look at crypto and Bitcoin. Let's start with some stocks and earnings because we're so focused on the Fed and inflation. Earnings are creeping up pretty soon. What do you think we should expect?
Oliver, I think we're in a situation here where even though earnings estimates for the second quarter for the street have been moving higher since we had a really strong performance in the March quarter, we're still not capturing the full amount of corporate operating leverage that's out there. And if we look at some sectors, particularly energy, with oil breaking out to new highs, as well as also looking at communication services, the likes of Google and Facebook, and the strength looked at for digital advertising. Obviously, I think we're getting ourselves set up here for a very strong second quarter earnings season, which, obviously it's a month away. There's a lot that can happen between now and then. But things fundamentally, as far as the earnings are concerned, look very strong for the market and stronger than people expect.
David, the hallmark of the last earnings season was the dynamic of seeing companies put up big numbers in the tech space for the most part, quarantine trades, if you will, put out huge growth figures, but it was almost like the bigger growth they showed, the more certain the market was that that was going to be some peak growth, and they sold off. We saw this in Apple. We saw this in all kinds of companies, especially in tech outside of Facebook and Alphabet with their advertising businesses. Is that out of the system now, or is there still a risk here that investors for some of these quarantine-specific trades are going to be thinking about peak growth as happening last year?
Well, I think as you touched on earlier in the spot or in the interview this hour, you've seen a rotation going from value back to growth. And if we went back and looked at the dynamic you were talking about, we had an environment here where we saw long-term interest rates rising, which certainly is, negative as far as high PE tech stocks are concerned. Now we've had interest rates come back in. And people are still looking for what are going to be providing the greatest upside relative to expectations. And there's a sense that if you look at some of the Apple mobility data, we don't necessarily see as rapid a reopening taking place in the U.S. economy now. Actually, the growth on the margin as far as the reopening trade is concerned seems to be going more over towards Europe. You're actually seeing the euro trade back up to the 125 level, which was its high back in 2018. And you're also seeing, in terms of sentiment data out of Europe, a faster ramp than what you've actually seen here in the U.S. So I think from that standpoint, yeah, there are a lot of dynamics that are shifting back and forth. We still maintain the view that economic reopening globally favors value, favors cyclicals, but the moderation on the long-term interest rates has been very important in here. And people obviously are starting to trade the next event, which is second quarter earnings after the Fed.
So is there potential here then, David, for the numbers in earnings, the bottom line, to be a catalyst that could maybe supersede some of the macro themes? To your point, right, where that value growth dynamic tilted back towards growth, right in line with the way yields have been contained. But if investors look at earnings now as part of this post-pandemic environment, and they see growth in some of these consumer cyclicals, or they see growth in some of the more industrially themed stocks, I mean, could this be something to revive that value strength, perhaps?
Certainly, and I think the surprises have to come up the top line in terms of revenues. And certainly, if you're looking at the consumer, the consumer balance sheet's in much better position as a result of all this fiscal stimulus that's been put into the economy. So there's a lot of pent-up demand amongst consumers to actually have the opportunity to go out and spend. Now, a rising revenue line, rising sales line is certainly going to serve to offset some of the cost pressures that may have built up. So certainly people will be looking closely at how good margins are, profit margins are in second quarter results. But we think overall what the street's missing here is this ongoing strength as far as top line revenue performance is concerned, and the fact that companies have gotten their costs down. So the leverage off of that revenue surprise is going to be a multiple when it hits the bottom line.
All right, let's. I like that setup here, David. Really useful stuff for earnings. I want to get your thoughts on some of the other dynamics. Obviously, the volatility in cryptos has been exciting to watch, while some of the other market dynamics got a little sleepy at the start of the summer. I know you look at Bitcoin as something that, if it fits within one's risk tolerance, it should be at least a small portion of a portfolio. And what do you make of the way we've seen how there's still possibilities for these deep, really savage declines like we got this year? How does that kind of fit into the narrative that this asset class will develop into something else if we're still getting these big moves like we would get? I mean, that was like the worst sell-off since 2014 by some numbers.
Yeah, no, certainly it's not for the faint of heart from that standpoint. If you've got major payments that you're trying to make within the next year, crypto probably isn't an asset class you should be considering. But if you're looking further out, 5 to 10 years, yeah, there's a lot of potential here. Now, technically speaking, in terms of looking at Bitcoin, people have been talking about a head and shoulders pattern. But the fact of the matter is, with the rally we saw last night or over the weekend, we don't necessarily see that right shoulder necessarily, really materializing into a further leg down towards 30. So, and given what you highlighted earlier about the movements in gold, the fact that gold's down, there has been this longer term debate that at some point in time, Bitcoin is digital gold. And some of the monies that have been allocated towards gold historically are going to be migrating over towards Bitcoin, which would argue that, Bitcoin has the potential to trade substantially higher from here. So, the fact that long-term interest rates have sort of come in, whether it's foreigners buying or whether it's the fact that, now that you've got corporate pension funds now reading is fully funded for the first time since 2008, and people are basically buying bonds and it's rotating out of equities in terms of corporate pensions in order to lock in and match their liabilities. The fact that interest rates are down, certainly favors both asset classes or both assets, whether it's Bitcoin or whether it's gold. And we're just going to have to see how this dynamic unfolds. In the meanwhile, on the margin, you said things like El Salvador are positive, but there's a lot of to and fro. And still, as a result of all that, cryptocurrencies, Bitcoin in particular, are going to remain volatile.
David, do you think, I guess maybe I'll ask it this way to kind of close this with the Fed in mind this week. What's the must-watch asset here around what they say? I mean, is it just bonds as it always is, or have bonds already given us that message? Is it going to be potentially more surprising for something like a gold or Bitcoin if the Fed is going to be very calm, even despite the recent inflation numbers we've gotten? If they don't talk taper, is that going to be a big lift to the gold and Bitcoin category if those two are tied together?
Yeah, I think, in terms of the tapering discussion, I'm kind of the view that this is something that's going to get pushed off until the Jackson Hole conference that the Fed has at the end of August in terms of talking about tapering and what the timing around that might be. Right now, the Fed funds futures are really not pricing in anything in terms of a move until 2023. And I think, Jerome Powell's commentary, as always, on Wednesday's press conference is going to be significant, as will be the updated summary of economic projections and the dot plot for interest rate increases. That said, I think Powell's dovish stance remains quite clear. And yes, that will, I think, be positive, for crypto as well as for gold. Obviously, in both cases, people are looking at this whole bet around inflation. Is it cyclical? Is it secular? From that standpoint, I think gold and Bitcoin or cryptocurrencies as an inflation hedge both still remain attractive. Obviously, the cryptocurrencies being more volatile than gold.